The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. Got about 24 minutes to go until the start of trading, and we have S&P's NASDAQ flat right now. A little bit of action on that 8:15 a.m. ADP private payrolls. We come at 37,000, so a little bit light on the payrolls. What does that mean? You have President Trump saying it means that Powell's late to the party. He should be cutting rates. We'll see if that's where Powell goes. But nonetheless, the markets. Why don't we jump to yields first? Higher price, lower yield. Coming at you this morning. You get the 10-year right now. You're up by a solid 12 ticks from where we were prior to that number. You're sitting at 4.41 on the 10-year. When you have lower yield, what's that going to do? That's going to bring dollar weakness into the market. We got a 98 handle. 98.998. We're basically trading right at 90, but you see the weakness on that 815 number in the dollar, and that's the little bit of slide we get in the S&Ps, and you're only talking about 10 or 12 points. We get non-farm payrolls on Friday. But yes, you jump to that headline number, and you got hiring. Slowest pace in 2 years is what it says. Now, this is not always indicative of where we go in terms of non-farm payrolls on Friday, but nonetheless, 37,000 is the number. They were looking for 100,000 and change in terms of private payrolls. In terms of pay gains, workers who changed jobs, 7% increase. Those who stayed put, 4.5%. They're coming down, but pretty remarkable numbers when you think about that. If you're staying in the same job, you're getting almost a 5% raise on an annual basis right now. Inflation's not going up that high, but that's going to be one of the things that's still a potential force on inflation. The Fed watching that one. So you get those numbers. Nonetheless, you get the market right now. Strong day yesterday in the market. We take a look at the price and volume. Pretty weak volume, though, on the dailies. Now, let's take a look at it. Start off with the S&Ps, okay? You're talking about a number yesterday, 1.117, okay? Now, again, we've been talking about this 6,000 range. We'll see if we can get through it. It's trying, right? We're trading at 59.81 right now. Payroll numbers today. Now, you know what I found myself thinking this morning? It's okay. So what if we're coming into a little bit of jobs weakness? What's that going to do? That's going to potentially cause yields to drop because the Fed's going to be cutting rates faster than we anticipated. And maybe that's the next leg higher. You know, earnings are going to drive these equities, but boy, one potential, because it's going to need something. We're stuck at 6,000 right now. And you check out this volume, okay? Again, 1.117, okay? Day prior, 1.155. But yesterday's volume, which was great price action, okay? You're talking about on the S&Ps. All you did was trade higher yesterday from 4 in the morning up until 1:30, and from 2:30 in the afternoon on, you chopped around within 8 points of where we are right now. You traded up 80 points to the upside, okay? And meanwhile, yesterday's volume of 1.117 in the S&Ps, okay, is less than the 28th. The only day that it sticks out is May 20th with less volume. What day was that? That's when we reached 59.93. Okay, so the last time we were peaking out near 6,000 was, again, the lowest volume day we've had, and those two volume days are the lowest volume days we've had in the last month. So every time we get to 6,000, we've had the latest 2 days in the last month as it just trails off. All right, and again, it's nothing compared to that selling, but we're just comparing it to this recent numbers. And you're talking about low volume. NASDAQ 100? Pretty similar action. Look at the volume yesterday, 419,000 contracts. We did slightly less on the 28th. There you are at the 16th, pushing those highs as well, but relatively low volume on a day where you just plowed higher by some decent action. All right, we jump around to the gold contract. some action in gold off that 815 number. Gold trading at 33.70 up to 33.83. Interesting, though, when you look at, right? You jump over the dollar, you got a dramatic drop in the dollar to 99 from 99.25. And you're not getting that same type of reaction to a certain degree. You're just back to where we've been shopping around. 33.84 right now for gold. We jump over to the silver contract this morning. Silver trading at 34.59. And yeah, we have some movement, but just not quite to the same degree that you may expect with that type of currency move to kick things off. Jump over the crude contract. Crude hanging tough at 63.45. We're going to talk to our man Teddy Kegstad at 40 past the hour. Talk to him every Wednesday. We'll talk some currencies, commodities, crude. Stay tuned for that one. All right, how about Bitcoin? 105,500. You're down by 1350. Had a great conversation with our man Basil Chapman yesterday. We're talking about he's got some action in Robinhood. Excuse me, folks. Up to 73.80 in the pre-market, man. It's not stopping. Now, what's so remarkable is when companies like this, and let's just see, what we're talking about here, because you're talking about a move. Yeah, we're approaching the 1-to-1, man. $82, and we're trading at 73 right now, is a complete 1-to-1 from the $13 price point of last August. And you're talking about an A to B leg from 13 up to 66. So a $53 A to B, and you do it all again, man, as we charge higher. Now, they purchased a company, Bitstamp, yesterday. Get this high. Look at that, too, right? Where's the projection? That spike high on the IPO of 2021. Because, yeah, that takes it back. Spike high of the IPO 2021. So they have 882 million shares outstanding. Call it 900 million shares for simple math, okay? And they purchased a company yesterday for $200 million. They have 900 million shares outstanding. And the company is now up $6 from where it was trading at the close of Monday, which is a $5.4 billion add to their market cap on that type of an acceleration. Now, let's see what's coming out this morning. Yeah, they got a little bit of a spike here. They got buying. That wasn't the jobs number. That was something else. Jump over to Coinbase. Now remember the S&P 500. Not bad. Talk a little crypto this morning. Coinbase. Yeah, chopping around near the highs of last March. 258. You're slightly in the red this morning for Coinbase. All right, market's trying to claw back right now. You had an initial reaction lower on those job numbers, only 37,000. And this is the private payrolls number. And last month's number was 62 initially, revised down to 60. So a net loss there of 2. We come in at 37,000. The expectation was for over 100,000. And yeah, that's on the heels of, or I should say a precursor to Friday's non-farm payrolls. But look at this market getting it back. We're already 8 points higher. And we're only a few points from where we were trading at just prior to that number. All right, folks, we got markets chopping around. Stay tuned. We'll come back. We'll take a look at some individual equities. Dollar Tree trading a little bit lower after Dollar General delivered strong numbers. We'll take a look at that. We'll take a look at some other equities. Don't go away.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Markets in the green. Can't hold it down, right? We got a private payroll number of 37,000. And the market says, yeah, we're back in the green, just like that. But part of that could possibly be we got yields dropping a bit. You have the 10-year right now at about 4.41%. And you jump around to part of this yield curve right now in terms of the shorter end. Going out to the 2-year. Down about 4 basis points. The 2-year, 3.92. The 10-year, as I mentioned, 4.41, down 5 basis points. The 30-year, 4.93, down about 5 basis points as well. Market priced in lower yield this morning on a weaker jobs number. All right, let's talk a little bit of Wells Fargo here. So, Wells Fargo, they're removing the cap, letting Wells Fargo off the leash. All right, so their asset cap's been lifted, and it's pretty remarkable. You go back. You're talking about here, all right, and to put this has been in place since 2018, and it was finally lifted yesterday, okay? And you jump around, you have their CEO, Charles Scharf. Now, he worked with Diamond at JP Morgan, okay? He hired Scharf out of college, turned him into a protege. And so, yeah, you can imagine the business is going to change when you've been under that type of an asset cap. And what's so cool is, and then you got the journal article here, okay? And this one goes into the regional banks, okay? So if you're looking at the regional banks right now, Keep your spikes up, as I like to say. KBW, the NASDAQ Bank Index. What this article talks about, I'll put this one in the YouTube Tigers Den because it's a good one, talking about banks. And there's no, dire circumstances here. It's just, hey, guess what? These regional banks, they've benefited greatly at a time when a huge competitor was prevented legally from competing for their deposits. And guess what's happening as of yesterday? The leash is off. And that's going to rattle the regional banks. And we'll see if it's coming for them. But yeah, they're going to make a run at it when they previously can't. Now, there's been a massive growth. I mean, quite a time to get told you can't add deposits when total commercial U.S. bank deposits go from 12.8 trillion to 18 million over a period of 3 years. Oh, yeah. What is that? Wow. Yeah, more than that. More than $5 trillion. $5.17 trillion on 12.8 in 3 years. So, Wells Fargo couldn't participate. This is what Wells Fargo's average total deposits by year look like. In 2019, they're at 1.29 trillion. They're currently at 1.35 trillion. Regional banks alone, okay, added $1 trillion. Let me get to that one. So, across all U.S. banks, average annual deposits grew by more than a third from 2019 to 2024. As I mentioned, Wells Fargo up just 5% over that time. They had to decide who they were going to keep, whose deposits to keep gathering, and whose to let walk out the door. Okay? They couldn't just keep increasing their assets as any bank would and then offset it with a liability, have a liability with an asset. They were not allowed to do that. It worked out well for Wells Fargo when the Fed started 2022. That drove up the cost of many deposits, but less so for many day-to-day retail ones. So despite its handcuffs, Wells Fargo, okay. Yet with its asset limits, Wells couldn't aggressively offer as many attractive deals on their cash, which would have helped foster relationships and feed into investment banking business. Now they can go after those targets. Okay? The regional banks, there we go, added about $1 trillion to their average yearly deposits from 2019 to 2024. Wells Fargo had it just matched overall national deposit growth. So if they just maintained market share during that period of time, they might have added $400 billion. They added nothing, right? They added what? 0.05 trillion, $50 million, but nothing over the period of time of that 5-year period. And guess what? Now they're coming for it. So be careful, some of those regional banks. Make sure you're positioned well because there's a new competitor in town. Talking about cars, man. How about a 600-foot vehicle, 300 miles southwest of Alaska, carrying 3,000 cars, 800 electric vehicles, and it's on fire. 22 crew members evacuated from the ship. Those electric vehicles. So you're going to hear more about that one, man. We know that we've seen. Look at some of these ships, man. 3,000 cars, 800 EVs. And it's probably torching on flames right now off the coast of Alaska. All right, how about on Jobs Wednesday, Private Payrolls Wednesday? How about talking a little bit of American savings? So, always good to see. 401k savings rates are just a shade below the commonly recommended 15%. That surprises me in terms of consumers across the board. But yeah, your 401k plan, 14.3% of the income is what people are putting in according to Fidelity. Now, the recommendation is 15% no matter what it is. It was at 13.5 in 2020. That includes a 4.8% contribution from employers and the rest from the employee contributions. And in the first quarter, 17.4% of people actually increased their savings rate and 5% decreased it. Now, the context, okay? More than a third of companies that use automatic enrollment now start workers at 5% of pay or higher, up from historical 3%. Many plans automatically escalate their savings rate by about a percentage point every year until you're at 10. That's a part of it as well, okay? Fidelity says 401k balances fell 3% to $127,000 as of this year. And among 24 million people whose accounts are administered, 6% changed their investment mix in the first 3 months. So 6% changed their investment mix, right? You might see the top end there, which is what I was going to get to. As in, almost a story of the haves, have-nots. I heard Marriott, an executive at Marriott was on Bloomberg yesterday, and they were just talking about, they're seeing an insatiable appetite for luxury travel. And if you have the means, and it's, as in, boy, this stock market's been a heck of a run, right? Commodity markets, gold, real estate, etc. And if you have that type of cash in a 401k, maybe it's time to put some more in those savings versus the people who are struggling at the bottom echelon. We'll talk a little Dollar Tree when we get back. Speaking of, stay tuned, folks.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open and talking about Dollar Tree, and boy, they're trading this thing, man. We're trading right now down 7% for Dollar Tree, down $6.90. We're pushing the lows you got on their numbers this morning, and there you go. You're breaking those lows down by 8.4% of the market. Liking that. We pull up the daily, and yeah, they get a false sense of hope on the Dollar General numbers, and this is where, devil's in the details, right? We'll talk about it, but yesterday, there's your expansion higher on the Dollar General numbers. We jump over to the Dollar General, and they're really not getting way down. They had some strong numbers, and then we jump back. So Dollar Tree is the one trading lower today, and they warn of the looming profit hit from the Trump tariffs. Now, what's so interesting here, Dollar Tree, Dollar General, right? The Dollar Tree is trading lower. They warned investors second quarter profit could be down much as 50% from a year ago, tariff-related costs. Timing of expenses are going to weigh on adjusted earnings per share. 145% levies on some products from China. Now, the two differences here, okay? And this is a great, just quick synopsis. Dollar General, which was the equity trading higher yesterday, okay, gets 80% of their sales from food and consumable goods. I'm never going to forget this, man, in this inflationary environment and tariff environment, everything going on. Dollar General, really relying on food and consumable goods. Dollar Tree, half their revenue, 50% from those categories, making it more reliant on goods from other countries. Okay? So yeah, food and consumable goods, 80% is Dollar General. When you go to Dollar Tree, no, it's like 50%, and everything else is coming from overseas. Dollar Tree has a vast majority of its directly imported products are from China. That's a problem. 145% levies. They just talked about it. On Wednesday, the company said it expects to mitigate most of the incremental margin pressure from higher tariffs. Yeah, nonetheless, right? Dollar General, on Tuesday, results are being aided by higher income shoppers. Right? Dollar Tree said Wednesday it's seeing meaningful increases in store traffic from households with incomes. Well, guess what? They might be, but they're still having problems, man. So, they can spin it all they want. And that's one of those, man. You really ever dig into the details, right? That was an easy one if you knew that going into today. Right? You say, oh, the dollar stores. Well, if Dollar General crushed it yesterday, Dollar Tree's coming. And somebody should have been, and they were, as in the adult in the room, saying, hey, these companies are a little bit different when you look at the percentage of goods that they're taking in from China. And everybody's trading up Dollar Tree on these Dollar General numbers, but Dollar Tree gets 50% of what they're talking about from China. They're in trouble, man. That's not ending anytime soon. And that's a perfect segue to this headline. Trump says Xi is extremely hard to make a deal with. I wonder what Xi says about Trump. Extremely hard to make a deal with. Do you think he says Trump's easy to make a deal with? No point on either person. Deals are extremely hard when you're talking about tariffs across the board. So, on Dollar Tree and Light, I like President Xi, always have, always will, but he's very tough, extremely hard to make a deal with. That's what he put late last evening. Nonetheless, we'll see how that one shakes out with Dollar Tree. Catching it on the chin, to put it lightly, this morning. All right, we check in on Wells Fargo as they're open for new cap, and there you go, up by 3%. They accelerate higher on that news. You're trading right now near $78, and yeah, you talk about a run, man, right? You trade lower in the pandemic. You're well above where we were anytime. And we check out the volume. This is a monthly. Yeah, huge volume with the market in April. Let's put it back to a weekly. All right, we'll see if we can get some weekly volume going. Ever since we got to about $74, we've had a drop-off in volume here, right? Week of April 28th, and that's with the market as well to a certain degree. You're coming back to the highs in February. Wells Fargo, we made that. Yeah, almost 80 million shares. At least it's Wednesday, and we've only done 27 million so far, but it could be a big day for Wells Fargo. What I will say is, it wasn't obvious this was coming, but it's not like it's a shocker. It's been there since 2019. We're 6 years later. Pretty remarkable when you put it in that context and how well they've done since then in terms of the growth with an asset cap in place. But as I was pointing out, right, what happened? Interest rates rose, the quality of the investments, where you are, etc. Nonetheless, Wells Fargo pushing the highs of $80 at $77.80 this morning. Yeah, and this one, talk about a buyer beware story. Constellation Energy. So they get a downgrade from Citi today. And the market downgraded them right on the open yesterday, right? They inked that deal with Meta, sign a 20-year contract for one of their nuclear reactors to make sure it does not go out of commission in Illinois, I believe. And the market says, no, we're trading it all the way lower, and today we're down by 2.4%. You compare that to Cameco, which is a uranium stock. This is a strong equity, but same thing. I was talking about on the program yesterday, coming into the opening bell, even on Constellation, right? This is why I enjoy the technicals and the fundamentals, folks. All right? You better believe yesterday when you're coming into this high of 352, for some context here on Constellation Energy, you were as high as 363, and you were trading at 352. Okay? You were trading at 353.05 to be exact, 5 minutes before the opening bell practically yesterday, which is literally filling the gap from the highs of January, and then boom, you're going to face a resistance there, and that's what happened. And then you get a downgrade today. Jump around to some of the Magnificent Seven. Not from Meta, though. The market likes that they get 20 years of nuclear energy, and the market likes everything going on with some of these tech companies right now. But look at Meta, man. Up by another 1.7%. Amazon up by 0.4% right now. Microsoft up by 0.2%. Apple shares 0.5% in the positive. NVIDIA, strong day, strong week shaping up. Let's go back to a daily. Yeah, big day for NVIDIA yesterday. You're pushing 142.17 right now. Some of the other tech companies, Oracle shares up by 0.3% right now. AMD, yeah, that channel's non-existent anymore. I still got it on there, but as I mentioned, that's a decisive break. AMD shares basically flat right now. We jump over to Intel shares, just chopping around that $20 price point, up by 0.6%. Take a look at some of the other banks. JP Morgan slightly in the green this morning. Bank of America, similar action. Jump to some of the airlines. Delta, basically flat, just slightly in the green. United flat as well this morning. JetBlue shares trading down 0.3%. Kohl's up by 0.8% right now. We jump to some of the retailers. Walmart down by 0.3%. Target shares basically flat. Yeah, Kohl's up by 1 percentage point. TJX down a bit, jumping around. Mickey D's down by 0.7% as well. We jump to that gold contract. Gold up by $2. All right, folks, we got the dollar right now trading at 99.04. Stay tuned. We're coming back with our man Teddy Kegstad. We'll talk some currencies, talk some commodities. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps up by 16 points right now, making session highs above where we were at 8:15 a.m. this morning, climbing towards that 6,000 price point. NASDAQ 100, similar action above the highs of 8 a.m. this morning. And we're going to jump over, as we always do, folks. Wednesdays, 40 past the hour, we're going to talk to our man Teddy Kegstad. If you haven't checked out the outstanding Tiger Forex report Teddy puts out weekly, you get a webinar in there as well. It comes with a 30-day money-back guarantee, folks, so you can't go wrong. Check that out. And don't forget, under the services tab, a couple of great webinars, Capitalizing on Time with calendar stock option spreads and Japanese candlestick pattern stock and option strategies with our man Teddy Kegstad. Check him out. Teddy Kegstad, good morning.
Good morning.
Where do you want to kick it off, Teddy? We got a little bit of private payrolls this morning. The market shakes it off. We're actually a little higher, but yields moving a little bit, the dollar moving a little bit. What do you think about this market?
Yeah, I think it's exactly what you just said there. The dollar's moving a little bit and yields are moving a little bit.
And the market shakes it off like it's nothing, man. It's like remarkable. Right. Yeah.
Yeah, I think it's going to be, until the Fed meeting in 2 weeks, I think it's going to be very, very sideways. So, I mean, you got to remember that now we're already at the half point of the year. So, and as far as, if the Fed does not give us a cut, in 2 weeks from now, there's another meeting at the end of July, and then the next one isn't until the middle of September. So we're kind of, there's only so many Fed meetings left. If they don't pull the trigger, at this next meeting, or especially in July, well, then we know we should be due for 2 rate cuts, probably, between the September and the last meeting of the year. So right now, the question is, are they going to pull the trigger or are they not? And I think until they will, we're range bound. And right now, I really don't see we're going to have much action at all. I mean, we made a nice little move, kind of on Monday. It got reversed on Tuesday. And now today we're in a, kind of a just set adrift. So, and I think that you have to be very careful with your expectations as far as any real trend moves, if you will. As far as follow through, so I think that's where we have to be, just cognizant until, 2 weeks from today when at 1:15 or, when the Fed does or does not make their decision.
And then when you go forward from there, because the Fed is in focus, they're in focus today. The president's got them in focus, Mr. Powell. do you have expectations right now as a currency trader when you're watching and you put out some great charts of many of these currencies, and we can dig into the pairs, but are you kind of just waiting for a momentum change there if you're looking, or do you have any indications of what you're exactly looking for, or are you waiting to see kind of where the trend shakes out?
That's a great question, Tommy. Actually, you know what? I do have a plan. So there's obviously one of two things is going to happen. Either the Fed does cut or they do not cut. So let's just say that Powell doesn't cut, right? So in that case, the sideways trade will end until the July, for at least a couple of weeks. Most likely you'll see, yields go up. You'll probably see the dollar get some strength in the short run, for probably like 2 weeks. So I would say that if there's no cut 2 weeks from today, starting either that afternoon or the following sometime between that afternoon and Thursday afternoon, you'll see the dollar and the yields start to tick up for at least a week or so, going into the end of the month and ending the second quarter. And then at the end of the second quarter, as we go into the holiday market for July 4th and that time, and then you go into the meeting at the end of the month, we'll probably settle into sideways, choppy. A lot of people might say it's summertime markets. This is not a summertime market situation. This is really a Fed, based, I think, environment that we're kind of looming in, if you will. But we've been talking about this, that we're kind of in this range trade zone right now for all of these markets. There's no real reason to define any new trend move, whether it be bullish or bearish, whether the market's going to break and start making new lows, or if we're going to get a rally and start making new highs. These things are really kind of, there's no reason to do one or the other, is basically what I'm saying, if that makes any sense,
Yes, no, I hear you.
And I think that's really that's just the markets we're living in right now. It's not like, there's times when the overall, like, you can start a trend, like, say, like this month, and you're like, okay, so now this market, like the euro US dollar, is going to be bullish most likely for the next 6 months, and in case that's when you look at any correction as just that, a correction, in that kind of a mode. We don't have anything to define that, whether it's any of the currencies or even the interest rate markets, So I think the biggest thing would be to watch the shorter term yields, the 1, 2, and 5 year, to see if we can get a reaction in those markets and really start to catch a big move on a daily basis, expanding their range. Then I think you might start to see a pop in the 10-year and the 30-year. But I don't see that really happening right now. There's nothing for at least fundamentally, there's nothing for the next week and a half that should stir that. I mean, granted, we have a couple numbers that come out. If they somehow really come way out of whack, then of course I could see a knee-jerk reaction. But unless that happens, I honestly don't see anything. I hate to say it, we're just in a sideways market.
Yeah, and I appreciate the take as always, man. Some great information. I know, not putting you on the spot, but saying, what if this, what if that, right? That's kind of the way that I look at the market as well. Just looking down the line a little bit, trying to figure out possible scenarios and how you approach them. Because I find myself, if I don't go too far out trying to make grand predictions, and I take things not as they come, but to a certain degree, right? All right, if this is going to happen, and looking at the possible ways that could play out. What do you think about crude, Teddy? We're pushing. I was just looking at the chart. It's remarkable, man. I go back to crude. I mean, we're at 63, 68 right now. We've been a little bit higher, but really that market around the April trade lower, I can't believe that's, as you said, time is flying. That's April 4th. So we're approaching the higher part of this trading range since you really ratcheted down on April 4th. We're at 63.70. What do you think about that crude market?
I think it's going to be sideways too. I think there's definitely some upward bias right now. But I think, like I said, I don't see any real follow through. I think we can make new highs. Monday we tried to break out to the upside. Yesterday we tested the highs again. Today we're floating right below it from the high from like a week and a half ago. Yeah. If we get above that, maybe we get. I mean, if we hit 67. 70, I think, would be the high that oil could spike up to. But if it goes up there, then I see it being where the market goes up, and it's literally going to fall right back off of it. It's not. Yeah. I don't think it's sustainable by any means whatsoever. So now here is the one thing is maybe because there's option and futures expiration and the second quarter ending. maybe that would, depending on the positions, could give us an upward bias going into the end of the month, or at least until maybe the next week or so. And then once again, if the Fed doesn't cut, then that's also gives not necessarily bullish support, but it doesn't give the market a reason to sell off, if you will, for crude. So, but I like it where it's at. I think, that would be the highest spike, but I could see it falling back a few bucks also over the next week or so. I mean, it's just a chop right now. I'd be very careful on a daily basis.
And the market's chopping. This market chopping is pretty remarkable. I'm sitting here watching the prices tick around that 6,000 price point. Teddy, man, some great information. I appreciate it. Folks, check out the Tiger Forex Report. And don't forget about those outstanding webinars under the Services tab, talking about candles, talking about options, some great stuff. Teddy, man, I appreciate it. Hey, we got the Stanley Cup Finals starting tonight, man.
Yes, we do. All
right, I'll talk to you next week, Teddy. Have a great one, man. Take care.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps up by 12, NASDAQ up by 39, Dow up by 50, and yeah, you got some action in Vista, man. VGZ, and not really sure why this thing's tanking right now. We're talking about the Tiger's Den. You got Vista Gold, put it on the daily, and you're down by 15%. You started to roll over yesterday. We got some big volume, and you know why it's down, folks? Because you got selling. How about 1.2 million shares traded in the first 15 minutes of trading? And if you're familiar with this equity, 1.2 million shares traded in the first 15 minutes of trading. For some context here, you got many days when we did 250,000 shares, 300,000 shares. You did 950,000 shares. Meanwhile, we've done over 2 million. We've done 2 million shares already today. Yeah. So it is quite a pop going on to the downside. But you know what, folks? It's been quite a run. You're talking about from 30 cents up to $1.30 over the period of just over a year. Can't be afraid to take some equities off the table, take some free shares. Think about it still. Okay, on a longer term basis, yeah, you might go higher. On a shorter term basis, when you go from 50 cents to $1.30 in the span of 5 months, yeah, you better be able to make sure you got your spikes up with that type of a reward. But yeah. And where are you back to, folks? You're back to the 1-to-1 on this, okay? So things started getting a little dicey when you complete a 1-to-1 A to B, C to D. And where'd you go all the way up to? The 1 to 1.618 expansion. How about that, right? That's it, folks. The 1 to 1.618. That's a completion. There it is. You're back to the 1-to-1 still. So be careful on that equity. You're dealing with a high-risk equity, even with gold where it is right now, folks, all right? And yeah, I still have some Vista Gold, okay? But you better believe that equity traded under $1, it's a penny stock, all right? It's a high-risk stock. You better treat it as such. And yeah, you're pulling back by 15% today. And yeah, we'll see if we can get Fred Ernest back, the CEO of Vista Gold, on the program. Been on there with many times with my dad. We'll see. See what's going on in that equity today, but keep your spikes up because something's going on. Something knows something. Somebody knows something. If you're going to exit a big position like that, no reason to tank the stock 16%. There's something out there, so be careful. Folks, thanks so much. Stay tuned. Basil Chapman's coming up next. Have a great day, everybody.